Shares of Disney are still up 7% after the company reported better than expected earnings, thanks to a profit at ESPN and some growth at theme parks. That offsets declines in ad revenue. Let's dive a little deeper into the numbers and what they're revealing about the media landscape. Joining us now, Mark Douglas is CEO of Mountain. Barton Crockett is Senior Research Analyst at Rosenblatt Securities. And CNBC Senior Media and Entertainment Correspondent Julia Borston is here with us as well. Welcome to all of you. Julia, just kick things off. Why such a strong reaction to the quarter, do you think?
Well, look, I think there was so much uncertainty about what Disney would be reporting, especially because they have this new reporting structure where they break out ESPN from the rest of the entertainment business. Obviously, there are a lot of structural issues that the entire industry is facing. And when it came to those, Bob Iger shared a little bit of a bullish outlook when it came to things like consumer spending and even advertising. In our interview, he said that the linear advertising business was actually better than anticipated. We saw higher than expected average revenue per user at Disney Plus domestically. That was because of stronger advertising. And he said he was very much bullish about the opportunity around addressable or digital advertising. So I think that was a key piece of it. And don't forget that the streaming numbers were much better than anticipated, 7 million sub ads. And then they just cut costs a lot more than they had previously said was their target.
All right. So with all of that in mind, Barton, what do you do with the stock?
Well, look, I think that Disney has a long-term road to delivering value. And I think that road has one of two forks. One is they figure out the business, and they showed some hint of being able to do that last night. Or if they don't, then I think you have asset value that will be realized in some type of breakup. So I think, the way they get there is in their hands, but I think you have an iconically valuable theme park business that drives most of their cash flow today. You've got an iconic film library and, and a historical ability to create new hits that is very valuable. And then you have these distribution businesses, Disney Plus and the TV networks that are in transition. But I think if you look through that, you can find value. They can either figure it out themselves or they'll be forced to do some other steps.
Yeah, and it was so interesting hearing John Malone kind of, again, talking about what a difficult business this is right now, the streaming business, at least if you're not Netflix. Mark, you thought that it was a bad idea for Disney potentially to sell ABC. Now you're not so sure. What's changed your mind?
What's changed my mind is that I think the way you see things rapidly evolving is that you have these franchises. Like you think of ESPN. If you think of sports, you immediately think of ESPN. If you think of family entertainment, you immediately think of Disney. But, what do you think when you think of ABC? And so what's kind of happening is I think you're going to see a consolidation under these big 10 umbrellas. For someone like Discovery, they can own documentaries and outdoor show. I mean, they have these strong brand associations. And when you have a property like ABC where no one really knows what you go there to watch, I think you start questioning, well, why do I need this, period? What content can I put on this that I couldn't put on these other kind of tent poles and franchises? And I think that's what's going to happen there.
Exactly. So if they do go that route of shedding those channels, Mark, what's the future? Theme parks, kind of enhanced content for future streaming, monetization opportunities? What do you see?
Well, the consumers expect a lot of content. I mean, that's the fundamental reason why Netflix, we always talk about Netflix, holds that top spot is because you have muscle memory to go there first. You just turn on the TV and there's always something new comedy, new documentaries, new original programming. You always go there first. And so for people who want these kind of like franchises, you're thinking you just have to have a ton of content for it. So I don't think the investment in content diminishes at all. And in terms of those properties, I think they get sold off for their libraries, just like, backfill content and that you can plug into where it's needed. But they don't become original sources of programming anymore, something like ABC at all.